Hello, friends. Very good evening to all of you. So, here I, Kunal Nagpal, once again feel privileged to welcome you back to this great economic forum. So, today we are basically going to discuss the strong economic news highlights, that is, we are going to discuss the overall prospects the economists pencil down in terms of lower imports, and that is basically going to narrow down the current account deficit, which will support the rupee, that is our domestic currency. Secondly, we will discuss the economic insights shared by our finance minister, Dr. Nirmala Sitharaman, regarding the note in circulation. She states that the note in circulation rise 8% annually to 32 lakh crore rupees. And as we are moving towards the digital economy, it is actually very good for an economy which is less based on cash flow. That is, more the economy gets digital, more better it is for the economy to get advanced and get stable on an overall basis. Next, my dear friends, we are going to discuss the question answer round, which we had with the renowned pioneer, Mr. Christoph Squeezer of BCG Company, who very fondly states that India has become an independent powerhouse. So we are going to see what all views he has to present, considering the overall global economic scenario. Dear friends, you might be seeing that every second day we are discussing the strengths of the Indian economy with regards to the global economic environment in which it is functioning. Since India is an open economy and we are counting its strengths on daily basis, which are growing gradually, which are multiplying gradually, and that is actually the thing to ponder upon, because we are growing in actually the strong multiplier effect, and we should be aware of this particular fact. So let's begin our today's discussion with a moral elevating stanza which states the right to salvation. The intellectuals and scholars say that one may attain salvation by dint of one's knowledge and intellect. Those who are karma yogis, that is, those who follow the path of actional cult, say that one will attain salvation by the dint of action. Salvation means emancipation of permanent nature. Now you know all are children of the Supreme Father. All the children of the same Father cannot have the same intellectual standard. It is impossible. It is very, it is actually very nicely said that all the fingers are not equal. Similarly, all the children of the same father cannot have the same intellectual standard. Very obvious. But that does not mean that those who are intellectually backward will not get his bliss or grace. So this idea is a defective one, that one is to attain him by the dint of one's intellectual knowledge or intellectual stamina. A father cannot neglect his son who is intellectually backward. Not just this, till recently there was a defective idea among all the people on the earth that males are blessed beings and females are not. This is actually a very hypocrite idea. In your family life, you feel that the parents cannot have any disparity between sons and daughters. Both are equally important. Both are the strengths of the parents. Both are equally loving. I said, my sons and my daughters are just like my two hands. They are like the wings of a bird. a bird with one wing cannot fly. All are equally blessed human beings, and those ideas that by the dint of one's intellect one will get him are actually defective, as is the idea that one can attain him by the dint of actional cult. In the realm of actionality, everyone does not have equal status. Anyone who is weak physically, mentally, or in spiritual vitality too has the birthright to attain salvation. What a wonderful write-up this is. And this is truly very, very insightful and quite relevant to today's economy. Next, let's come back to our economic segment, economic news segment. So first economic news highlight is the economists pencil in lower imports to narrow the current account deficit and support the rupee. The falling imports due to the lower commodity prices will help ease the demand for the US dollars and support the rupee, economists said. The fall in imports will reduce India's current account deficit next year and hence help it withstand the US dollar strength, they said. India's trade deficit narrowed to $23.9 billion in November, down from $26.91 billion in October, and was the lowest in 7 months as exports increased marginally after a fall in the previous month. The economists said lower commodity prices will help shrink the deficit in the coming months, providing more support to the exchange rate even as the exports remain weak. Slower domestic growth could also keep the imports muted, hence reducing the deficit. While the weakness in exports was largely expected, the fall in imports remains a key emerging trend, with India's own growth expected to consolidate to 6% in the financial year 2024 from 7% in the financial year 2023. We expect the current account to register a smaller deficit of $105 billion next year, with the risks biased towards a smaller deficit given the falling crude oil prices, said Barclays economists Rahul Bajoria and Ms. Shreya Sodhani. Nomura economists Ms. Sonal Verma and Mr. Aurodeep Nandi called the global economic slowdown a double-edged sword. On one hand, the domestic slowdown and lower global commodity prices should result in the lower imports. On the other, the current account would be under pressure from the lower exports, and the current account would face the outflows from investments, trade credit, and external commercial borrowings, reflecting tighter lending standards by the commercial banks globally. I repeat, on one hand, the domestic slowdown and lower global commodity prices should result in lower imports. On the other, the current account would be under pressure from the lower exports, and the capital account would face the outflows from the investment, trade credit, and external commercial borrowings, that is ECBs, reflecting tighter lending standards by the commercial banks globally. On the whole, we can expect the current account deficit to narrow to 2.5% of the GDP in 2023 from 3.0% in 2022. But at nearly $100 billion, funding this deficit will still require large debt and equity inflows, Mr. Verma and Ms. Nandi said. The Indian rupee fell to 82.87 rupees per dollar on December 16, bogged down by the rate hikes from the US Federal Reserve and the European Central Bank. Both raised rates by 50 basis points along the expected lines. It had fallen below 83 rupees per dollar in October. In his comments post the RBI's monetary policy review, the Governor Shaktikant Das said the slide in the rupee was in part due to the dollar's rally against major and emerging market currencies on account of the US Federal Reserve's aggressive rate hikes. It cannot be the case that the Fed's monetary policy will be tightened endlessly. When the tightening is over, the tide will surely return, Mr. Das said. Meanwhile, India's forex reserves have risen for the fifth consecutive week, that is $564.07 billion, as stated by us earlier as well, though down from a peak of $633 billion, indicating that the pressure on the RBI to defend the rupee is actually easing. That's actually the great news for the Indian economy. Next, we would consider the views of the Finance Minister Dr. Nirmala Sitharaman in terms of the note in circulation, which rise to 8% annually to 32 lakh crore rupees. The Finance Minister Dr. Nirmala Sitharaman on 19 December 2022 said the note in circulation has witnessed an annual growth of 7.98%, that is nearly 8%, to 31.92 lakh crore rupees as of December 2, 2022. The demand for currency depends upon several macroeconomic factors, including economic growth and the level of interest rates, she said in a reply to the Lok Sabha. The quantum of cash or the bank notes in the economy depends on the requirement for meeting the demand for the banknotes due to the GDP growth, inflation, replacement of soiled banknotes, and growth in the non-cash modes of payment. She stressed that the mission of the government is to move towards a less cash economy, as stated by us at the beginning of the session, in order to reduce the generation and circulation of the black money and to promote the digital economy. That's the main essence of the overall growing trend of digitization, which is the key to the strengthening of the overall economy. Both the government and the Reserve Bank of India have taken measures to promote a less cash economy and encourage digital payment, she said. So with regard to the rationalization of merchant discount rate for debit card transactions, she said, the Reserve Bank of India has advised the banks to ensure that the merchants onboarded by them do not pass on the merchant discounts rate charges to the customers while accepting the payments through the debit cards. The Department of Revenue advised the banks to immediately refund the charges collected, if any, on or after January 1, 2020 on the transactions carried out using the electronic modes of payment prescribed under the Section 269 SU of the Act, and not to impose the charges on any future transactions, though the prescribed modes have been very well preferred, the minister noted. The Minister of State for the Finance, Mr. Pankaj Chaudhary, in a reply to the House said the crypto assets by definition are quite borderless and require international collaboration to prevent regulatory arbitrage. Therefore, any legislation on the subject can be effective only with significant international collaboration on evaluation of the risks and benefits and evolution of the common taxonomy and standards, he said. Currently, he said, the policy related to the crypto assets and related ecosystem is with the Ministry of Finance. So replying to another question, Mr. Chaudhary said, there are actually 4 stock exchanges having the commodity derivatives segment, with Multi Commodity Exchange of India Limited, National Commodity and Derivatives Exchange Limited, Bombay Stock Exchange Limited, and National Stock Exchange of India Limited at present. The consumer food price inflation has declined from 7.01% in October 2022 to 4.67% in November 2022, as we had quoted earlier. Adding, the all India average retail prices of the pulses have not exhibited any sharp and consistent increase in the recent months. That's a good news. In another reply, Mr. Chaudhary said the total foreign direct investment inflow in the country increased from 81,973 million US dollars in the financial year 2021 to 84,835 million US dollars in the financial year 2022, reflecting the increased foreign investment opportunities in the country. In order to promote the FDI, he said, the government has put in place an investor-friendly policy wherein most sectors except certain strategically important sectors are open for 100% FDI under the automatic route. The government reviews the FDI policy on regular basis in order to ensure that India remains an attractive and investor-friendly destination. The government is carefully monitoring the current account deficit and early in the current financial year had increased the customs duty on gold from 10.75% to 15% in order to restrain the gold imports, which are likely to reduce the current account deficit, he said. Further, the Reserve Bank of India also announced a series of measures to increase the forex inflows to finance the current account deficit, he added. So as we had discussed in the previous article, a lot of efforts are being made to reduce the extent of the current account deficit in the Indian economy. And that's actually quite favorable for the overall growth prospects. Next, we are going to discuss the interview round, that is the question answer round or the interaction the ET had with Mr. Christoph Squeezer of the BCG company, who basically states that India has become an independent powerhouse in today's global economic scenario. India is poised for significant growth for years to come due to the combination of global economic shifts and a strong local policy, said Mr. Christoph Squeezer, the new president and CEO of consulting firm BCG. Although a global economic slowdown may impact the growth in the near term, the country will remain an independent economic powerhouse, Mr. Squeezer told Mr. Vinod Mehanta in an interview. Previously seen as catching up with the rest, it now appears to be actually leading the way, he said. Mr. Squeezer, who was in India for the BCG India's 25th anniversary celebrations, also spoke about the Indian economy in the context of the worldwide uncertainty. The change in the perception of the country as an investment destination. BCG being the consulting market leader in India, the scrutiny that the management consultants are facing globally, and the EY split. The first question put to him is, India seems to be bucking the global recessionary trend. Given the global economy's interconnectedness, will the global slowdown catch up with India, or will it maintain the 6% growth? Will it be able to maintain the 6% growth? It's actually a very connected global economy, and India is a very connected economy. So, is any place in the world immune to the economic shocks and recessions in the other parts of the world? No, neither is India. India is at a 6% plus growth base, and even if there was a significant recession in Europe and the US, it would have an impact. But the growth won't go down to the low single digits or negative. I think India is poised for the significant growth for many years to come. To some extent, it's related to the rest of the world, but it has now become an independent powerhouse. What has worked for India is actually a combination of the global economic shifts and strong local policy support like the Production Linked Incentive Program. Next question put to him is, you have been visiting India over the last 20 years. Do you see lately any shift in the perception of India as an investment destination, especially after the COVID-19 pandemic? To which he replies, there is a complete mindset shift regarding India. I think India is not only a big economy, it's also demographically in a very good spot. You could say it's actually one of the healthiest democratic economies you find anywhere in the world. What a great moment of pride it carries for us to be Indians. With many young people actively getting into the workforce and without major aging challenges. Secondly, the continued investment in infrastructure and innovation in India is paying dividends. The global economies look at infrastructure, especially the digital infrastructure, and how the long-term and stable the government's policies are. That's actually very vital for the economy's overall success. In my early years, when I used to come here, it always felt a bit like India was catching up very quickly. But now it feels like India is leading the way the country should in many ways. We see it in the tech and IT industries. We see it even in the healthcare and the pharma sectors. And we are seeing it more and more in the manufacturing sector as well. That's actually quite overwhelming. There are early steps in the climate technology and hydrogen. The innovation spirit and the mindset of India has massively changed. India is much better positioned now as an investment destination. And my dear friends, that's actually the essence of Atmanirbharta or self-reliance, the theme being actually propagated by our respected Prime Minister, Shri Narendra Modi ji. Next question put to him is, in your various client interactions, do you see a difference in the mood among the Indian CEOs versus the CEOs in US and Europe? The mood of the clients in India is exceptionally positive, and not surprisingly so, since the economy is doing well and India's role is getting stronger and stronger in many regards. The clients are also very bold and very ambitious for the future. In some parts of the world, there is more talk about a potential or the real recession happening than here. The clients in India are at a very different spot, and the talk is about growth, innovation, and what kind of contribution India can have to the entire world. The Indian companies can have in many important industries like technology, manufacturing, or the new green tech, which is the emerging topic everywhere. I find it so energizing. Dear friends, it brings a great amount of zeal and enthusiasm after reading these lines, as said by Mr. Christoph Squeezer. Next question put to him is, can a democratic India replicate the success of China, which is driven by a centrally controlled state economy? Well, I'm going to refrain from commenting on what makes the democracies work or fail. If we talk about what it takes to attract the foreign investment, well, for one, a stable, attractive, and comprehensive legal framework for doing business. Secondly, it does take a fantastic workforce. So many companies are struggling with the talent. Our prediction is that the talent will be a scarce commodity elsewhere in the world, no matter what the economic cycle does. I think what India has done and needs to keep doing is just have that incredible talent. It entails having high quality colleges or high schools, vocational schools, and universities, as well as continuously expanding the workforce we have. Thirdly, it's about the availability of the capital. Fourthly, it's the kind of the renaissance of the risk assessment. There is actually a lot of upside, but what is the downside and implied risk in terms of the political stability, economic environment, and so on? These dimensions will matter in attracting more investment. Next question put to him is, India has a robust startup ecosystem and currently seems to be struggling with the profitability and funding problems. Do you see a shakeout happening in the Indian startup space? Is the tech winter real in parts of the world? Yes, absolutely. But there has been a shakeout in the startup and innovation space every few years. After the 2000 tech bust, the 2008 GFC, and other moments, you saw very little. That is, every single time that the winners and the really substantive and differentiated startups actually accelerated out of such a crisis, and then others disappeared. It will be a repeat this time, and in India too. Many of the startups are incredibly strong and they operate in a much better environment with access to the capital. We support 1/3 of the unicorns in India. That's actually a great moment of pride and truly incredible. And I can say there will be incredible success stories. Startups are carrying the India brand very well. What's your prognosis for the global economy for 2023? It's actually never been harder to predict how the next year's economy is really going to look. Very few people actually remember high inflation in the Western world, but now, sadly, it's the reality. What history teaches us, however, is that inflation can be a very toxic and dangerous thing for the overall economic stability and as a consequence for the political stability. While the inflation rates may look relatively comparable, the underlying reasons and drivers are fundamentally different. In core Europe, it's largely the energy prices and to some extent the food prices that drive inflation. And a lot of that has to do with the war in Ukraine. The drivers of inflation in the United States are completely different. It's a kind of long-term increase in the factor costs, in particular in labor, which is more significant and much more steady than it has been in the Western Europe. The one with which the US has been tackling will be harder to bring under control. Big parts of Europe and on the verge of a recession, and I think the likelihood is quite high that they will be in 2023. The US is still 50-50. Even if there is one, it will be a short one and not that dramatic. China, I think, fundamentally still extremely well positioned for the long run. Of course, there is the short-term uncertainty about the COVID lockdowns and the real estate dynamics. In which countries is BCG a market leader in strategy continuing and the overall consultation? Does India fall in that category? BCG is currently the market leader in high-end consulting in India. Period. we only share the revenue and workforce numbers on a global trend. How has BCG performed in the COVID-19 pandemic years? BCG India has been a powerhouse for the BCG globally. So, I am deeply convinced that it will remain so for many years, if not for the decades to come. It's truly been a growth engine for the BCG. Secondly, BCG India has truly been an innovation hub, that is the true innovation hub. Earlier, the ideas and solutions were developed in London, Paris, and Tokyo and brought into emerging markets. At this moment, there is so much innovation coming from the emerging markets, particularly India. In the BCG Olympics, a competition for the coolest projects and insights, BCG India has been winning way more of those awards in a wide range of topics. Some of our global centers of excellence on certain topics like the family business are based in India. BCG is an amazing talent hub for the BCG globally. What's the main driving force for the demand for consulting after the COVID-19 pandemic? With so much change and disruption, consulting will be in high demand. Will it continue in 2023 or 24? For us at BCG, this is a good market environment. BCG works best when the massive changes collide, causing massive discontinuity. And we have plenty of those, that is geopolitical polarization, inflation, capital market volatility. There is still plenty of COVID out there in the world. Then we have the mega trends of digitization and climate change, as well as the sustainability challenges. Many CEOs are turning to us in these moments of truth to get the advice on their most pressing challenges. 2022 has been a strong year for the BCG. We are definitely winning market share and we expect that to continue in the years to come. That is, every challenge brings the opportunities and one should be a true market player to catch hold of those opportunities. The management consultants have been under a lot of scrutiny lately for some of the assignments and clients they have served. I would just say that there hasn't been a book written about the BCG and there are good reasons why that hasn't been the case. We have very rigorous processes and policies on how we think about the work that we take on and which clients we serve and which we don't. Those have been actually in place for many years. We turn down work regularly, and in our global partner meeting, we celebrate people who have turned down the work in areas we are not comfortable with. I would also say that you can never process and policy your way out of trouble. It's about the right culture, spirit, and philosophy. I can proudly say that BCG is the integrity leader in the consulting world. The companies are having to deal with the increasingly complexity involved in businesses and in keeping pace with the increasing technological changes. How are you, as the BCG's CEO, making sure that the firm itself is keeping pace with the changes in the marketplace? I do think that in a way the CEO of the BCG is also the change driver in chief. There has to be the constant evaluation in who we are, who works for us, and how they work. It's actually one of my absolute top priorities. We are now attracting a much broader and different mix of people. Secondly, there is continuous learning and upskilling. The last few years have been the record years in terms of training and the new capability centers that we have built. Even the most senior partners are upskilling themselves, particularly in tech, digital, artificial intelligence, climate, and sustainability. These are such dynamic spaces that the trainings you did 12 months ago is actually literally obsolete. There is also a constant flow of exchange with external institutions. In the future, can artificial intelligence disrupt consulting? Artificial intelligence will be a driver of our business and it will not make us obsolete. In the early days of digital, there was talk about how many industries were going to be totally eradicated and how hundreds of millions of people were going to be made obsolete. And if anything, digital has brought a lot of progress to the world, but it has not killed the jobs. In fact, there is a shortage of the digital talent. So we talk about the 10 to 70 formula. If you want to get the full impact of the digital transformation or the artificial intelligence transformation of the company, 10% is the tech question, 20% is the IT, data, and underlying architecture question, and then 70% of the solution lies in changing processes, organization, skills, incentives, culture, spirit, and leadership. BCG brings all those capabilities together. So this 10 to 70 formula is very effective, my dear friends. I repeat once again, 10% is the tech question, 20% is the IT, data, and underlying architecture question, and then 70% of the solution lies in the changing processes, organization, skills, incentives, culture, spirit, and leadership. And BCG brings all those capabilities together. So here we had discussed the broad insights shared by Mr. Christoph Squeezer, who is the CEO of the BCG Consulting Company. And he states that India is actually the growing economic powerhouse in the near future, and it is about to become an independent player in the global economy. So this is actually a great moment of pride. And he also states his views that how BCG is going to be a major help of aid and how it has been the successful player in the times of global crisis. And what all opportunities lie ahead for this particular company. He also states that how India is being able to visualize the global threats as the opportunities and how it is converting the challenges into opportunities for itself and is helping the world to overcome these crises, and how the world is visualizing India as an effective place to do the investments in this country. So, on this note, my dear friends, I would like to conclude today's lecture session, and I hope it would have been great pleasure if you find this session greatly effective, and this was able to bring effective modification in your overall knowledge base. That's what I believe, and I would like to thank all of you for attending this session. Thank you so much. Namaskar. Jai Hind.